Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode 224, How to Turn Your Retirement Savings into Income. Cory, thank you for joining me back on the show.
Thanks for having me once again.
And I know you just finished up a round of pickleball with, actually some of our clients were participating. So how'd you do? Did you win?
I won. Felt pretty good. You know, I don't play a lot of pickleball, but I play a lot of racket sports. So it all kind of translates.
Now, I know you got a t-shirt on, but it is cold in Kansas City. So were you indoor or were you outdoor?
Pickleball was indoors, inside the bubble. So it's heated.
Gotcha. Good. And is it just as fun inside as it is outside?
Yeah, I think so. Yeah, pickleball actually, yes. And sometimes playing it inside can be better because the ball's not influenced so much by the wind. Even like tennis, the tennis ball will move in the wind, but a pickleball is like a wiffle ball, right? It can move around a lot.
If only you could play golf indoors. Wouldn't that be neat?
That would be neat.
That'd be a big bubble.
That'd be a big facility, yeah.
All right, well, thank you. I'm glad you had fun today, and thank you for joining back on the show. Again, this is episode 224. Today, we're talking about how to turn your nest egg into an income that will last you, hopefully, the rest of your life. And full disclosure, big disclaimer here, Cory, I am not talking about an annuity. A lot of times when you hear advisors talk about retirement income or income planning in retirement, it's because they're trying to pitch you an insurance product or annuity. That is the good news. Not the topic of today's show, Cory. Good news on that one. First disclaimer. And speaking of our show, if you haven't already subscribed, please feel free to do so. Our subscriber count continues to grow. We're very humbled by that. If you think our content's any good, thumbs ups are always appreciated. And of course, like and share our content with your friends, family, coworkers, brothers, cousins, sisters, uncles, dad, whoever you think
Everyone
could get some benefit from our show. Again, as fiduciaries, we're here to act in our clients' best interest, and we want to help people. And that's the purpose of this content, is to help our clients. So I wanted to talk about today, Cory, some of the ways that we turn that nest egg into an income stream, because that's actually a very common question that we get from new clients as they're approaching retirement. They say, hey, Jake, I've got $3 million, but I'm not going to save anymore. I'm not going to work anymore. That gives me some anxiety. How do I turn this $3 million into an income that me and my family can live off of and never run out of? And that's obviously a very important part of investing for retirement and planning for retirement. So the number one way I'm going to kick us off, Cory, we're going to ping pong this, your tennis reference back and forth here, is simply bond interest. Now, many clients don't fully understand bonds, and rightfully so, because historically speaking, you have not been able to buy them in a 401k, Cory. But what a bond is, it's simply a loan. So instead of buying stock in a company, you're loaning a company or government money, and in return, they promise to pay you back an interest payment, whether that's today 3, 4, 5, 6% plus. And then typically, after a predetermined time frame, they will pay you back your full principal, or what's called the face amount, paid back to you. So bonds are great for income. They're typically safer than stocks. And I think they make sense in a well-diversified portfolio, particularly for a retiree that needs and wants income. Now, the one kickback with bonds is they typically don't grow like stocks do. So again, you don't necessarily always want to put all your money in bonds. We like to have a combination of growth and income. But for the income, for today's show, retirement income, a bond can be a great way to generate some of that retirement paycheck that you need. Cory, did I leave anything out on bonds before we go to the next opportunity there to generate income?
No, I think you covered it.
It's pretty good. Well, there's several types too, before we move on to the next one. So there are municipal bonds, which are typically issued by cities or states. They're typically tax-free, which is a pretty cool thing. You do not want those in an IRA or 401k because they're tax-free already, so you don't need to be doing that. There's corporate bonds issued by corporations, and there's government bonds issued by governments, or like the U.S. Treasury, for example. Those are probably the most common types of bonds that we buy for our clients. There are other things called junk bonds or international bonds that we typically don't dabble in as much. For our clients, we like to keep it this part of the portfolio pretty simple. We want investment grade, high quality, typically bonds that are either treasury, maybe a little bit riskier in corporate, and then having some municipal bonds if and when it makes sense. All right, so that's only one way, though, to generate income. There's many ways to do this with your retirement savings. And Cory, why don't you go into our second way to generate income?
The second way is through an investment called a preferred stock. So a preferred stock is a hybrid, I'll call it a hybrid, between a bond that you just described and a common stock. And a common stock is exactly what it sounds like. If you own shares of XYZ company, you're a shareholder, you've purchased the stock, you own common shares. The preferred stock is somewhere in between the two. So just in terms of a company's capital structure is where it falls. We don't need to go into all the details there. The point with a preferred, though, it is a type of investment that someone can make to generate income. And there may be inherently more risk involved than owning a bond, but less risk involved than just going out and buying the stock. And for what it's worth, where that really becomes problematic is if the actual company were to default, right? Otherwise, where it falls in the capital structure is less important. But the idea with preferred stocks is that the same way a company issues bonds because they need to raise cash, they will issue preferreds. Preferreds typically are callable after X number of years, which just means the bank, for example, that issued that debt, that issued those preferreds, has the right after a certain number of years to return the principal to you and no longer pay you interest. The beauty of the preferreds for a lot of clients that we work with and the preferreds that we've purchased over the years is that the interest rate associated with those is higher than a bond. And also that interest rate is actually set to float after a certain period of time. So the environment that we're in today in 2022, where interest rates have been ratcheted higher, as these preferreds reach the period in time where the interest rate actually starts to float, the amount of income that they generate may actually increase over time.
That's a lot. And they're a little complicated. They're a little bit more complicated because a lot of people don't know about them. I just answered a reporter's inquiry about preferred stocks, and technically, Cory, also another feature of them is that they don't have voting rights versus common stock, which again, our clients don't really care about nearly as much. But I like you sound like a millennial saying this hybrid, like hybrid car.
Hybrid car, hybrid work. Sometimes it works, sometimes at home.
There you go. So
all about the hybrid lifestyle.
But you're right, it sits in the middle. So you got common stocks are typically higher risk, higher reward. Bonds are lower risk, lower reward. I prefer to be right in the middle here. You're typically going to get a better dividend. They pay dividends, not interest. It'll be a dividend.
Yep.
They're typically issued by banks, and some of them can float. Not all of the interest rate payments float. So there's different types of preferred stocks. But I think they do make sense for some clients as part of a well-diversified income strategy, particularly in retirement. Now, even a younger client that's not necessarily looking to retire and they want to generate an income sleeve in their portfolio, preferred stocks aren't so bad because they also actually have an opportunity to appreciate in value. So not that they're going to like shoot up like a common stock, but you can buy a preferred stock at a discount, for example, collect some interest, and then if it goes up, you could sell it, Cory. So that's another idea behind preferred stocks is that you're hybrid, right, or in the middle. They kind of have the best and worst of both features, right, of stocks and bonds. There's still some risk like stocks, but they're not as risky. And they pay income like bonds, but they're not as safe, right? So again, right in the middle. I think I like them generally speaking, but again, it's a case-by-case basis with clients on if they make sense for their portfolio. So again, the topic of today's show, I don't want you to go out there and just start buying preferred stocks on your own because, or bonds or anything that we talk about, because again, we've got to look at it as fiduciaries and then your financial plan, and then we develop this retirement income strategy. So speaking of stocks, Cory, leading up to our third opportunity to generate income in retirement would be simply dividends from stocks. Broadly speaking, there's two types of stocks. There's a growth stock and an income stock, right? And so for our clients, we typically have not perfect 50-50 of both, but typically half are growth and half are income. And the income stocks typically pay dividends. And what's great about this is that you can own 1,000 shares of a stock and it can spit off income, but you never have to sell any of the stock. Now, one important piece, Cory, and I'll let you chime in here. A lot of people don't realize this. And I think it's not fascinating, but I think it's important that they do understand that if you have a stock and it's trading at $100 a share and it pays $1 dividend for every share you own, when it pays that dividend, the price of the stock will go down directly in the amount of the dividend. So in this example, your share price will go from 100 to 99. So some people, Cory, think that the dividends are on top. So they're going to get $100 plus one, but that's not how it works. So the price will go down. But what's beautiful about it is your share count doesn't change. So in my example, you still have 1,000 shares. Now they're worth, $99 a share, but you also got $1 in cash, but you still own the same amount of shares. So again, dividends can be a great thing in a portfolio to generate retirement income. Again, it's case-by-case basis. We're not looking to give advice. In this episode of Upticks, we're looking to educate our audience on just different ways that we take that big $3 million nest egg and we start turning it into investments that will generate income. Cory, did I miss anything on stocks?
No, you explained that really well. I think talking about the growth and value, and if people, watch or pay attention to CNBC or whatever else it might be as far as financial journalism goes, there's certain market environments where growth companies are favored. There's certain market environments where value companies or income companies are favored. And I agree completely in that both of them belong in a portfolio. But generally speaking, the way that I think about it, and I've talked with clients about before, is whether you buy a growth or a value company, you could really think about it as a way that you intend to be rewarded as a shareholder. A growth company is trying to grow their earnings more than the rest of the market, so you get appreciation, where a value company is going to generate free cash flow in the form of dividends, right? But you might not expect the stock price to double or triple the same way that a growth company may. But the fact of the matter, to your point, Jake, is that they both belong in a portfolio, and dividend-paying, value-oriented companies can be a really useful way for a retiree to generate income.
Right. And we particularly like companies that have a long history of increasing their dividend. So the idea is that you can hold the stock and you'll get a little bit of an increase in the amount they pay. And be careful on that, Cory, and I know you weren't suggesting this necessarily, but dividend stocks or value stocks can also appreciate rather significantly as well.
Sure.
So I don't want people thinking when we buy dividend stocks, we're not expecting them to grow. They can certainly do that. And if you look at some of the oil stocks this year, they not always, but they typically will pay dividends. But oil had a good year in the market, relatively speaking. So some of those stocks, Cory, are way up and they've been paying dividends. And that's a double bonus for that. But I get what you're saying. The expectation here is not necessarily that we're looking for hyper growth. We're looking for stability, income, and sure, and we do want to take some growth because we're getting some risk. We do want to get some growth because we are taking some risk, but that's just something we want to be aware of. Perfect. All right, so what's our fourth way to generate income into retirement?
Next is through options premiums. And options premiums, there's an options market the same way there's a stock market and a bond market. There's a particular strategy that we employ for select clients that involves selling something that is called a covered call. The idea is if we own shares of XYZ company in a client's portfolio, when we sell a covered call, it's a type of option. Someone else pays for that option. And it effectively is just setting the price target at which we would be comfortable selling the company. But someone else is willing to pay us for the right to acquire our shares in the future at a predetermined date at a predetermined price. So the whole idea is
big disclosure here, though, Cory. Again, options are not for the everyday investor.
Correct.
This is a sophisticated strategy that Cory's talking about. We are not recommending you go do this on your own. Covered calls, for what it's worth, are a relatively conservative option strategy, but it's a slippery slope, Cory, because I think people can, if they start doing this on their own, then they start learning about puts and calls and naked and covered and blah, blah, blah. And you can wipe away your nest egg if you're not doing this correctly. That's not what we're suggesting are these aggressive options. I think that disclosure is important, Cory, because again, this is not for a do-it-yourselfer. You got to be very careful with options because if you get it wrong, you literally could lose thousands or millions of dollars. And again, that's not what we're suggesting. So go ahead, Cory. I'll let you finish your example here. But
no, I appreciate that disclosure. I appreciate that disclosure, but that specific strategy I'm referencing is just in the spirit of the show that we're recording here today, which is how do you turn that retirement savings into an income stream when you're going to start living off of those dollars. And that's one way that we will take advantage of doing just that. And it's unique. It's something that you don't have the option to sell options if your money is invested in mutual funds, for example. It's unique to individual positions like individual stocks that we buy for clients.
Right. And to do options, again, I recommend you work with a trained professional, someone that has experience, someone that's licensed and knows what they're doing. But it can be a beautiful way to generate income. And again, the way we do it, we're doing it, we sell away potential upside because the stock's already up. And so we generate income from that. So there is risk with the way we do it. And again, it's important to remember there's risk in all investing.
Everything.
Right. So there is risk here, but it is another way to generate income. So before we go over our last one, Cory, the quick recap, you've got bonds that pay interest. You have preferred stocks that pay dividends. Then you have just common stocks that pay dividends. And then if you understand it and you're qualified and we get you approved, we might be able to trade options to generate all these things, generate income, which is wonderful. And then the last one would be selling stocks or trimming stocks that have appreciated. So in our example, maybe you have a growth stock that's doubled in value. Well, maybe it's time that we trim that back. Maybe we don't sell all of it, but we sell a third of it. And instead of reinvesting that cash, we use that cash for you to go buy a boat or to live off of for the next 6 months or however the dollar amount, kind of works into your financial plan. But the beauty of buying individual stocks is that while the broad market is certainly down in 2022, that doesn't mean that we don't have individual stocks, Cory, in our portfolio that have appreciated, that if a client needs extra income or just needs income in general, there are opportunities for us to sell certain stocks at a gain to generate that income. Now, again, this is not our first method, because again, we talked about all these other methods before, because again, if you sell the shares and you spend the money, well, now you don't own anything, where with a bond, at least you have the interest you're making, right, or the dividends. When you sell a growth stock, cash it in, and then spend the money, money's gone, right? So that's not we don't lead with that, but it is an opportunity that, if you have a stock that, we're projecting it growing at 7% or 8%, and it's grown at 15, well, why wouldn't we take that extra percentage that it's made you and either reinvest it in something else that's now low or cheap, or you can just flat out live off of it. Did you have anything you wanted to add there?
No, I think that's really good. And I think that's a good explainer, because the reality is, for the vast majority of people that want to retire at some point, I think the biggest shift for people to understand is going from working and saving to retiring and spending, and understanding how that investment allocation fits into their financial plan. Because the whole objective of, yes, growth is important, of course, exceeding inflation is important, but understanding exactly how you started the show, Jake, which is, I've saved up this chunk of money, I'm not going to work and save anymore. How can I actually generate income so I can live off of this and not have to worry about running out of it? That's a huge shift generally for people as far as their approach to investing in retirement goes. And that's why we, encourage people to work with a chartered retirement planning counselor that understands that that is one of the top priorities or objectives oftentimes for a lot of clients. And it's the biggest shift.
You're right. You're absolutely right. It's generating. So again, two more things I wanted to add here, and they're not necessarily investments, but one is, so literally we'll take all this income and we can sit down with you and show you your projected income stream. I did this with a client the other day, Cory. It was great. We actually have kind of like, I think she calls it her mad money, just in a separate account. She's like, I just want you to send me the dividends and interest, and I'm going to blow it, but I don't really care because this is not my retirement money. It's like her mad money. So she wanted to see what, next month, how much am I getting in mad money? And 2 months from now. So we were able to show her, hey, this is based on the investments you own today and their schedule for payments, this is what you can expect over the next year. And I think she really liked that, because she knew when the cash was going to be coming in, so that she could go spend it on fun things for her, right? Guilt-free spending. So we can literally set this up, though, to come to you on the 1st and 15th, once a month, every other month, every week, whatever you want to do. But we'll take all this cash flow. And then some people ask this, Cory, that, it's obvious to us because we do this every day, but we literally then will link up your bank account, your normal checking, and we'll take these dividends, interest, whatever, and we'll start sending it to you twice a month, once a month, once a quarter, once a week, whatever you want to do. And even if it's in an IRA, we can also withhold the taxes that you'll owe Uncle Sam so that you net out what you want to net out. A portion goes to, the Fed, a portion goes to the state if you have to pay state taxes, and then you get the net, and then it's all automatic and done. And it's easy for our clients if they want to adjust it. It's a simple phone call into our operations group, and they can adjust it up or down. If they want to know how that impacts their financial plan, then the financial planners can meet with them. And then again, you and I are kind of overseeing the whole strategy as part of this and there. And the second point I wanted to bring up, Cory, did you notice what I didn't notice or didn't bring up today? What did you notice what we didn't talk about as far as turning that nest egg into income? What did we not bring up?
Annuities?
Right. Annuities,
okay.
Mutual funds, exchange traded funds. You don't need to buy a product to turn your nest egg into income. I think a lot of advisors, Cory, they use this as a sales strategy that they'll say, oh, yes, give me your money. I'm going to sell you this flashy product, and that's going to turn your retirement into a pension or into an income stream.
A personal pension.
Yeah, you don't need a product to generate retirement income. You don't need to do that. You've got Social Security, you've got dividends, you've got bond interest. Maybe you work or you don't work. Maybe you do have a pension, maybe you don't have a pension. But my point is you don't need to go buy maybe you have real estate, maybe you have a rental property that pays you income from renters. So again, you don't need to go buy a product. It's not necessary. We don't believe in products at Falcon Wealth Advisors. Our clients come to us because they want us to manage their capital. They want us to be fiduciaries, and we handle all of that in-house. But that's what we did. Good one, Cory. We didn't mention running out and selling you a product or buying a product from us because you don't need to do that to turn your nest egg into an income stream.
I mean, literally this year, when the Federal Reserve raises interest rates, that means you can park your money somewhere, presumably, and earn more money. The point there being maybe people are of that belief, Jake, because the last 10 plus years, we've been in a very low interest rate environment. And people have felt like, well, I don't earn anything on my savings account, or I can't earn anything on my checking account. So I have to buy something in order to generate income. But that couldn't be further from the truth, to your point.
Right. Well, good. Well, thank you, Cory. As we wrap up today's show, again, a quick summary. You've got bonds, you've got preferred stock, you've got dividend paying stocks, maybe options make sense from you, maybe selling some growth stocks that have done better than your others. All those are ways that Falcon Wealth Advisors looks to generate retirement income for our clients. If you have any questions, you can certainly reach out to me directly at jake@falconwealthadvisors.com. Cory's is Cory@falconwealthadvisors.com. That's CORY. And thank you again. We hope all of you are having a great holiday season. We look forward to kicking out more of these episodes in 2023. Cory, you got any parting comments?
Nope. I appreciate everyone watching and tuning in, and we'll be back next week.
Yeah, it sounds good. Well, thank you again. Yeah, I'll be out next week.
I'll be back
traveling, but but we are going to have a special guest on the show, so make sure you tune in next week to Upticks because you don't want to miss that. All right, perfect. Thank you, Cory, and thank you all for tuning in. We hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.